Good morning, traders. It's Monday, August the 13th. Taking a look at the charts, we've got some fairly decent price action going on today. We've got some volatility going on, meaning it's going to be an emotional day for most traders. Markets are trying to really shake things up and put in market bottoms and tops depending on the asset class. And let's just take a look at the SP 500. So on the left here, we've got our SP 500 30-minute chart of the futures, and this is only regular trading hours, so 9:30 to 4. And we've got a couple things that we follow on here. We're during an uptrend and strong technical analysis. We've got green bars. Green bars mean that the bias is to the upside. When we get lime green areas, that means the market has pulled down to a short-term oversold territory. We've got this green stair-stepping line here is the 20-day moving average overlaid on the 30-minute chart, and the blue one here is the 5-day moving average. And then we've got a short-term cycle analysis kind of projecting forward where we expect the bias to be in the market. And then over here we've got the daily chart. And last week we saw the market dip down, tag the 20-day moving average, and it got oversold down in this lower area here. This is Friday's session, and then it bounced back up to have a half decent close up at this area here. So you can see it acted as support. Now futures this morning, today, more or less we saw them flush down, sell off even more. Overseas markets are down. And we've seen some pretty good volume step in, and it's recovered again. And so the market is set here to gap. It was trading down in this area here to be oversold again. And more or less today, we've got an upward bias in the market. So things are going to be pretty choppy. We've got the markets gapping down, likely to get bought back into. And well, we could see another big reversal potentially similar to over here, which the market sold down early in the morning and then eventually rallied to be very strong on the session. And that was this session over here where it gapped down into oversold territory and went into a full multi-day rally, which is what our cycles were pointing to as well. So that's where we are in the grand scheme of things for the index. We are still holding above the 20-day. We are oversold. And if we look at the panic selling on the NYSE, this is our little kind of custom ratio here. This is when this is over the blue line, that means we've got panic selling. People are just dumping shares on the New York Stock Exchange, which is called the Big Board, which are all the big brand name stocks that the average investor is trading. And when the average investor is dumping all the big names, that means they're fearful. And when you put that with an oversold market condition, a cycle low, if we take a look at the VIX today, here is the VIX. The VIX is spiking up, spiked up yesterday. Today it's trading even higher in pre-market. So we've got fear in the market, and we're probably going to see the put-call ratio, which I haven't pulled up in a long time. The put-call ratio closed up over 1 on Friday, and I think it's set to gap. It'll probably be higher today, meaning people are buying puts expecting the market to fall. So all these things are telling us there's panic in the market, and we might see the market put in a very significant bottom this week. Might not happen today. We might see increased volatility for a couple more sessions, huge intraday price swings, but these are all the signs that we're still in a bull market, and these are the signs that people are panicking. And when people are afraid and the market dips, that's usually an opportunity to get back in. So we could be looking for some new long setups going forward. We did get out of our Dow position right up at the top on this exhaustion gap to the upside. We closed out some of our IYT, our UDOW, expecting some type of pullback, and now we're down to this oversold territory in the Dow again. We do have a big gap here. Gaps tend to get filled, and if the market gap's lower today, it'll probably fill today's morning gap, and maybe by the end of the week we close this other gap, and it could continue to work its way higher on the daily chart, move up to nominal new multi-month highs again. So that's what we're looking for. Now, if we take a look over at the chart of bonds, big pop there last week on Friday, more or less a little bottoming formation, and it just kind of popped and took off until it hit the next resistance level, which is over here. And more or less, there's fear in the market. Money's moving into the safe haven bonds, and that's a good sign. It usually means the equities are trying to put in a bottom. Now, if we take a look over at the dollar, let me pull up the dollar. Here is the dollar chart, and you can see here we've been doing this big running correction in the market, and it really broke out last week. The weekly chart shows it pretty clear here that it's got a nice strong close. If this if this can hold for more than a week, then we're probably going up to this 100 mark. And if we go to the 100 mark, we're going to see pressure on commodities. Could see metals and oil continue to struggle and move lower. And obviously, all the different currencies. If we look at all the other currencies on the chart, it's kind of hard to see them all on here, but more or less, you can see how the dollar is in strong rally mode, and all the other currencies have been fading and tapering lower um, in a significant way. So overall, money is continuing to flow into the U.S. dollar as the safe haven. Obviously, it's kind of like a currency crisis. People are flocking to the dollar, and usually we see gold do really well during times of crisis. But again, if the dollar is rallying, it's going to put downward pressure on gold. But eventually, gold will be found as a safe haven, and when the dollar starts to top out, it should start to rally and come back with a vengeance. Now, if we take a look at Bitcoin, I zoom out a little bit here. Bitcoin's been fading back down. It looks like it's slowing. It might have some type of exhaustion, oversold kind of pop here. But overall, we are looking for Bitcoin to continue to fade lower going forward. If we look at this, our intraday chart here, you can see it kind of dipped down, started to get oversold, couldn't find a bottom, and then we started to get into these orange bars indicating the bullish bias on the market is now gone neutral. Orange is neutral, and if they go red, it means we're in a downtrend. So that's kind of where Bitcoin is at this point, potentially starting another extended downtrend and down to these new lows down over here, which is ideally what we'd like to see. Taking a look over at, let's just jump into the gold and silver, both down about $1 this morning. Strong down about 1% this morning. The strong dollar definitely putting downward pressure here. You can see gold kind of giving way and moving lower. Silver's doing much of the same thing, has the same type of pattern over the last 2.5 weeks. And of course, it's poked down to new lows. So we're going to see weakness in the precious metals market. I do feel like they're getting a little long in the teeth. If we zoom out here, it's been a significant fade down in price. We're getting down to these new, today here is new multi-month lows, and I think we're going to see a very strong reaction, a knee-jerk reaction eventually to the upside here, but the dollar needs to start to kind of have some type of volatility and pull back a bit, and but I do feel like we're getting very close to potentially three kind of surges to a low. So we've got, if we have this pattern here, we'd look for 1, 2. If we can get one more that pushes down to new lows within roughly about that time frame over the next 2 or 3 weeks, this opportunity, if we have a reversal bar, could be the spark of a very significant knee-jerk reaction back up into the mid-range in price for gold and silver. So that's kind of what we're looking for, some type of panic kind of reversal bottom formation here. Last but not least, moving over to energies real quick. Natural gas rallied up into the middle of this range. We were expecting it to get to the 290 as the first resistance. It pushed a little higher. It got right deep into this resistance level. Today we're seeing it pull back, and I think natural gas has got a bunch of work to do here. It's had a very nice run, and we'll see if it can form a nice tight pattern. If it can keep a tight pattern here, then we could have a very explosive move to the upside. If it continues to get really choppy and push to nominal new highs and sell back down, nominal new highs, sell back down, if it keeps doing this type of pattern, then we could fall into an opportunity to take advantage of a breakdown and for it to come all the way back down to the lower end of its range. Looking at crude oil, last week had a little bit of a drop and it's kind of stuck under resistance. It kind of broke below these pivot lows, and today it's popped up a little bit higher but then sold back down. It's under the 5-day moving average, which is this kind of baby blue line here, and I think we could continue to see this work its way down to the 65, 64. Depending on how much speed it gets, there is a measured move here from this high to this low back to this high. It gives us a Fibonacci extension move down to 62, which would definitely cleanse the market. It would break this previous low, and it would definitely potentially set things up as a topping formation in the market if crude oil was to do that, because we'd have this kind of first move up, and then we'd have like a head formation, and then we'd come back down with a lower low, and we'd start to put in this significant kind of broken support trend line. And if it gets under there, it could start to work its way lower and head down. So We'll see how crude oil forms over the next little bit, but overall we still have a downward bias, expecting it to be under pressure here for a little bit more and potentially come down to the 64 area or beyond. Anyways, that's it for this morning. Talk to you in a little bit. Bye bye.